Yes, sir. It's your boy Cage tapping in. Hey, look, man. Another cool week in the market. Started to get some of the movement in which I was waiting for. Some of this down movement, feeling some of these inefficiencies, some of these imbalances, and of course, everyone's on the Bitcoin train. Everyone's talking about Bitcoin, Tesla stuff. A little bit of advice: if you're hearing about this stuff on social media, you're probably already too late, right? That's why it's good to demo trade. That's why it's good to follow a whole bunch of market shit. That's why it's good to read about the market daily. I don't have my book on my desk, but reading books about the market, understanding the sentiment, understanding seasonality when it comes to the market, so that you can already be ahead of these moves before they happen. Um, I know certain people were calling out Bitcoin at 50K, 25K, and now when it's at 100K, it's plastered all over the internet. So be wary that some of these things, when you hear them, it's already too late. The time has passed. They want to take your money. They want you to get in that Bitcoin at 100K. They're not gonna tell you wait for it to drop down to 90,000, right? They're just gonna post it. You're gonna hop in. You're gonna lose money. Then you're gonna give up on trading. Meme coins. Stay away from the meme coins. Yes, it's quick money. Trading isn't quick money. If you think you're gonna get in here and make $1 million in a day, you might be able to, but guess what? When you lose 50,000, you're gonna kill yourself. That's the truth. Because you're not ready for those type of emotions. I'm gonna keep it 100 with you. Don't be out here trading meme coins. Don't be doing the bullshit. If you're willing to spend money on the meme coin, you should be willing to spend money to invest in it yourself, right? Courses. You don't need a course to be a successful trader, right? But here's what you do need from the course. You need to see that person trade live. You need to experience a live, profitable trader trade. You need to see how they talk about the market. You need to see how they move and operate through the market. You need to see how they set up their plays, how they get out of their plays, how they take losses, how they take wins, how they go through weeks, how they go through months. That is what's going to elevate your trading. Watching someone live trade and being around someone live trading. You buying a course for $100 or $200 or $500 is not going to make you a fucking millionaire trader. It's going to give you information that you may not know, but guess what? You can go to YouTube and get that information. But enough rambling. Get in some of these charts, go over some of the levels for the week in which we are getting to. And if you guys don't know, Think Unlimited Trading is my little Discord, my little trading group. It is free. The reason I have that is so that people can connect with like-minded individuals for free, right? I do have another big boy group in which I am in. That is a big boy group for a reason. They trade crazy in there. Lots of capital, different type of trading. I'm trying to reach out to the beginner traders because I know how it feels to be a beginner trader and not have anyone to talk to, not understand the market, and and then at the same time pay $50 to $100 a month and you have no idea what the fuck is going on either. So that's what Think Unlimited Trading is for. Think Unlimited. Don't put a box around yourself. Think all the time outside the box. Think Unlimited. You can do this, you can do that, you can do this, you can do anything that you fucking want to, as long as you fucking believe it and think about it. All right. So let's get into some of these levels for the week, especially with NQ. Um, Basically on NQ, I was waiting for a pullback. I want to pull back with NQ. I want to see us tap some of these lower levels in. I want to see us fill some of these fair value gaps in and inverse them. I want to see us come and fill some of these inefficiencies, these imbalances, these liquidity. We got some stuff everywhere. Most of it is to the downside for NQ to fill in. We can go to the weekly. Um, Look at the weekly. We all reacted off of the FFG. If I take this indicator off, you don't see anything, right? But I still know what the FFGs are because I know what the FFG is. We got one candle, two candle, three candle. That second candle is really large. You take the gap in between that second, you take the gap in between the first candle and the second candle. The gap right there, you make an FVG. That's the FVG, right? It's an inefficiency and an imbalance in which the market should come back to and fill in. Should and have to are two different things. It should. Doesn't mean it has to. It should, right? Check this out. So on a bigger time frame, we broke structure, came a retest, broke structure again, made an FVG. We came to tap back into the FVG. We bounced out of the FVG. That was on the weekly, right? Let's go down to the daily. What we're looking at the daily. The daily is a little more explanatory for me myself. The weekly is just gonna show you a huge time frame. As you go down lower and lower, you'll understand what it's actually doing in the market. So right here on the daily, you can see these reactions, right? This is that FFG, right? You got two FFGs on the daily, one FFG on the weekly. I know this is the one from the weekly because I can see I can see it. This is where the broken structure is, right? So we have one, two, three, four, four candles. Well, five candles that reacted off of that FVG on the daily, right? Buyers came in, sellers came down. Buyers came in, sellers came down. Sellers came in, buyers came in. Sellers came in. Now look, you would think buyers came in. They tried to. Buyers tried. I was watching the market all day. Buyers tried to hold this market up all day. It just could not do it, right? So I love how we ended Friday. I love it. I love it, right? We made this candle. This is telling me the sellers took control, right? We made this long wick up here, which is kind of a liquidity sweep, if you want to call it, right? But this is telling me sellers are in control. So my next, what I would wait for next is for us to clear this lower level out on the daily, the previous day, which is 21,607. To be exact, it is 21,604.25, right? We clear 21,604.25. We come down to this FBG, do something like this, inverse it. This is the daily, so it's gonna look a little different. Possibly come down here, boop, 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 maybe consolidate a little bit, boop, boop, and then maybe a Thursday or a Friday, come sweep it all, inverse it, and then continue lower, something like that, right? Now that's something that should happen, right? Does it have to? Absolutely not. Absolutely not, right? So let's go from the daily. Let's go to the 4 hour, right? This is for my supply and demand traders right here, right? 4 hour. Let's open this up a little bit more. I honestly don't trade on TradingView. I like the chart on it after the market's not moving, but I've paid for TradingView. Somebody tell me if they have this issue. I paid for TradingView and I still get a lag with data and I still get hit with commissions crazy. Like my commissions on TradingView is nowhere near the amount of commissions I pay on TradeAway. Absolutely not. It's way more. I could be in the same trade and lose more money on TradingView than I do on TradeAway. I don't like that, and the data doesn't sync up all the time immediately. Even when I pay for it, I paid for the data before, and it still doesn't sync up. It just disconnects, and yeah, you know, when you trade in futures, you gotta have the right price point. You can't just be getting in at any fucking price point. That's not how shit works, right? All right. Oh, I switched it up. My bad. Maybe a little bit of a long video today. All right, so let's go back here. This is the 4 hour, right? Supply and demand traders. Boop. What I would do is I draw one here. Perfect. This is perfect. This area right here, perfect. The indicator drew it already. Perfect area I would target. Then I'll take another one. Boop. Target that area. And then it's already drawing it here. But I'm gonna draw it again so that you guys can see it. Then I'll probably play this area right here. Where that candle goes, right? Now that's the 4 hour. Drop down to the 1-1, right? Now this is why I mark it on the 4 hour, but then I go to the 1 hour and kind of clean it up, right? So I want to see where the market holds. Came up here, held, came up here, came down, held, came down, held, bounced out, consolidated, came up, came down, broke out, right? Rejected, came back down to this level. So you see how it's kind of staying within this huge range right here, 2160 and that 21420 pretty much. It's staying within that huge range. So what I will wait for, right? I will wait for one of these ranges to react. We had a gap fill that we did come fill in yesterday, right? But we left this wick down here. I noticed that. I like that wick down there. That's going to give me a target. We came and made an FVG late at the end of the day. That, I'm not worried about that. That is only kind of telling me people try to get in and buy it at the end of the day and kind of boost the price up. Yeah, whatever. I'm pretty sure we inverse this FVG on next open, right? All right, let's go down to the 30-minute, right? I'm doing exactly what I would do on the days I'm taking the trades. I'm going from the weekly. If it's the beginning of the month, I'll do the monthly, and then all time I do the weekly, the daily, the 4 hour, the 1 hour, the 30-minute, 15-minute, and 5-minute, right? All the way down. I'll take my entries on the 1+ minute, right? Now, once we get to the 30-minute, this is important, right? You see this black line? Let me see if I can get rid of the other one. Boom. Perfect. So you see these lines? We got 1 line here. We got 2 line here. We got 3 line here, right? This indicator, well, it's not an indicator. It's a VWAP, and it's an anchored VWAP, right? Anchored VWAP. Let me see if I can spell that right. Anchored VWAP, right? This is an anchored VWAP. Anchored VWAP, right? Anchored VWAP is going to tie the VWAP to the high of the day and the low of the day based on the direction, right? So this is the VWAP starting in at the beginning of the day. It's tying it to high of day, right? Now what you would wait for is you want it to either stay on top of the high of day, or once it breaks through the high of day, which is up here, this first red candle, right? Now you can wait for the retest. This is the 30-minute. Now let me tell you exactly what I would look for. 15, right? I'm going over exactly what I did on Friday. So we had the anchor VWAP, boop, 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 boop. This is the same thing as the VWAP. It's just gonna follow that. It's gonna follow the price action for that opening day, and not the just standard volume weighted average price for that, right? It's gonna tie in standard deviations, ADRs, average true ranges, and all that just by itself, right? So this is the anchor VWAP high of the day. The top line is the high of the day, right? At what, 9:45, we started to get that first bearish candle, right? The bearish candle broke below the high of the day, right? Came down to the middle point. Now that would be where you would take profits. If you're in the first trade, you would take profits at the middle point. That is a 60-point fucking move on NQ. That is amazing, pretty much, right? One contract you're eating, that's $1,000+ I believe. And my calculations are off, right? So we took the break. Boom. Let's drop down to the 5-minute. We start seeing that candle move, right? Let's go to the 5-minute. Look. All right. So we started to get these doji candles. Boom. Evening star. Reject, 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 reject. Broke through the daily high VWAP. Came down, retested the middle point. Came back up, right? Buyers tried to get in. This is what I mean by buyers are trying all day. Oh my God. They was trying all day. Like, and when I tell you they were trying all day to get in, they were trying all day to get in here, right? All day. Came up, rejected the high of VWAP again. This right here would have been an ideal entry. This right here would have been an ideal entry, right? Boom, wait for the close. Stop loss above the high of the candle, right? And you would take another entry down to the middle point of the VWAP, right? Simple as that. This stop loss probably about, let's see, 26, about a 20-point stop loss right here, right? So you're risking about $400 to $500 to make, what is this? 86, 40. You're risking about $500 to make about $800. Now that's a perfect trade, right? Because we're below the daily VWAP, coming down to the middle point, right? And you could even tie a runner in if you want to do it here, and you want to take the retest again. This is the retest high below that candle. You never got stopped out. You could have rolled it all the way down to the lower VWAP, right? Now here's the key point. This line right here, it is symbolic and it levels up with what it reacted right here. That's why it's good to, when you draw these lines, look, that's why it's good to, when you draw these lines, let's go to 1 hour. You draw these lines, you can extend them all the way back. You can extend this all the way. You can take it a few months back. That's why I use NQ1 and not the actual contract. You can go a few months back, but being that NQ just making all-time highs, there's nothing to the left. That's what's tricky about all-time highs. There's nothing new up there until it starts making anything new, right? Let's go back into what else I was looking at for that day. So we broke below the VWAP. I was actually waiting on some bearish action pretty much all week. We started to lose volume going to the upside. Once we start losing that volume going to the upside, I am looking for bearish action, right? So this is the actual trade that I ended up actually taking in the morning. Stop loss was above that wick right there. Let's drop down to the 1 minute to get a better picture of actually what was going on with that trade. And it's perfect, even more clear on the 1 minute, right? Even more clear. So look, came down, we broke, retested the high of VWAP, rejected again, came down, broke it. You could even took an entry here after these rejections. Perfect. This is the entry that I took above this candle with my stop loss. I waited for we start to get some more bearish action. Once we broke structure here, at this candle, then, and that's also the high VWAP, then I was actually pretty confident in that trade. And I actually ended up letting it run. And I made about 680 or 675 that one day, one of the two, even between 670 and 685, right? That's how much I made that day. Now, throughout the week, I was getting hit up pretty bad. Being that I was trying to short the market when it wasn't ready to be shorted, and I still don't think it's ready to be shorted now. Meaning that I don't think big money is ready to get rid of a lot of their capital in the market right now at this point. Maybe once we get some just regular random news, some more war news or something like that. Maybe they'll offload a million more plus shares, but that's where you get those huge drops. Where like maybe back in was it back in August or maybe back in April where NQ dropped maybe 500 plus points, almost 1,000 points overnight. That was because like some war news overnight, right? That was some war news overnight. So NQ right now it is kind of bearish. But is it full bearish? Absolutely not. I don't think we're full bearish until we get below here and start testing some of these lower levels. We got all this imbalance that we do have to fill in. We do got to fill it in, and it's in between this gap. We do have to fill that in. Well, we should fill it in. That would be great if we do fill that in. Also, you got to take into consideration of the time of the month and what we're rolling into. It is December 14th, 2024 on a Saturday. The New Year's is about in 2.5 more weeks. Once we get in the new year, everything's gonna start kind of rolling into new sentiment. We're gonna have to start getting rid of the options contracts that are due to expire this year. They're gonna have to start getting rid of the rest of the shares that are due to expire. If you have option contracts, but with that as well too. Futures contracts, they may roll over. When you get a futures rollover, it's going to provide a lot of gap fills in the market and a lot of spreads. So once you start getting that January 1st New Year, I think we start to get a little bearish to begin that New Year. We're already doing the Christmas rally. We do the Christmas rally every year. The market gives out money for free for Christmas. It absolutely does. I remember this time last year saying I'm going to get in the next Christmas rally. I missed it again, dummy. Whatever. But now I know next year to be prepared. Those times where I missed the moves in the market, I study them. I study why they happen. I study what I could have afforded to use in that position because a lot of people say, "Oh, shit, Bitcoin's at 100K. You don't have enough money to even make an investment in Bitcoin. So therefore, why are you stressing yourself out if you miss Bitcoin? Now, if it was at 25K, maybe you could have put something in there to get you a little bit, but nobody's putting in, not nobody. The regular average American's not putting in 50K in Bitcoin to buy one Bitcoin. No, they're not. So therefore, don't stress yourself out about missing those type of plays. Tesla, Nvidia, AMB, SPY, QQQs, those are plays you can stress yourself out about missing because they're very, 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 very cheap when it comes to blue big chip stocks. They're very cheap when it comes to being able to get a position in. You can dollar cost average, which means buying shares daily, 20, 20, 100, 50, buying shares daily, dollar cost average your price. Or you can get an options contract, a long dated options contract. You can trade weeklies. Weeklies made spies at, this is why I like options. Spies at 600. I like anything that's going to allow me to use a little bit of my money, that chance to make a lot. I like that. Anything but sports betting, right? Um, so Spy's like at six something right now, right? Let's check it. Spy's at 604.21 right now. I can probably get a long dated option contract for a weekly for about maybe 100 to 200 bucks on a weekly. So which means starting Monday, if I'm expecting price to go down, I can buy a contract which is 100 shares. I can get 100 shares of SPY at $604.26 for maybe $180. Like, come on now. Come on now. So you're getting it at a discount, right? When it comes to Greek state and all that, I'm not explaining that to you. Go do your own fucking research. I'm not doing all getting into all that. I'm just presenting the opportunity how you can get into some of these markets and in some of these pushes, right? S&P 500. I remember when a SPY was at 348 and we were debating if it's gonna break over 350. I remember that day. I remember sitting in this fucking broke ass financial office selling bougie illegal fucking loans and watching SPY go from 348, 350, 344, all the way up. I got a piece of it. I did. I definitely made about 990 off of SPY that year. But when it comes to actually getting in these, I feel like I did miss a lot of opportunities, especially Tesla. I miss Tesla a lot. I do actually like Tesla, one of my favorites. But let's look at the VIX, right? The VIX is the volatility index. Now, what it measures the volatility of the S&P 500 index, right? Normally, when we have, I wrote some notes down here. Normally, when we have VIX on set, when we have it in between $16, which is up here, 16 and like 17, you can see the S&P 500 probably move about 1% a day. So it may sound like a little bit, but 1% of total price that it is right now. So 1% of 20,000 is a lot. 1% of $600 can be a type of move. Mostly you'll see like 0.02. It's still moving a few dollars, but it's not 1%. 1% of $604 is probably not $10 or $11, right? So, and I could be wrong, but correct me. Once we start seeing the VIX in that up here where we start getting into that $18 range, stuff like that, we getting a little more volatile. Actually, I should say a lot more volatile, right? And then you go from that and you get into this 20 to $24 range. That's when you start seeing those almost 2% moves. And then, as everybody knows, once we get into the 32 up in the 30s, we start seeing those 2+% moves daily, which is really, 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 really major. This is probably that month where we had that 500 plus point drop in Q as well too. This is going to measure the volatility index for the S&P 500, right? It's going to measure how volatile it is. What's the fear and greed index? This is pretty much what it is. If you guys haven't heard of the fear and greed index, it's basically, let me see. It's basically gonna tell you where the market is, what the market is like right now. Neutral. It's neutral. Back in August, when the VIX was in the 30s, it was in extreme greed. And I remember looking at that, and I remember saying, "What the fuck? Why is everybody being so fucking greedy? Why can't people just relax?" Come on now, that's like a rhetorical question now. People want as much money as they can take, right? So the market's in a neutral state, and that's why it's very fluid right now. It's flowing. It's flowing. But guess what I trade better in? Extreme greed and extreme fear. I trade the best in extreme greed and extreme fear markets because everyone else is kind of either hands off and the market flows directional base. So if there's liquidity at 20,000 and it's in extreme greed, it's gonna come sweep all the fucking buyers out. I just know it is when it's in that market, right? So that's one thing I definitely pay attention to when it comes to actually having the ability to understand the volatility of the market. I talk about volume and momentum a lot. And I figured out how important it was when I kept losing my trades. I didn't figure out how important it was until I kept losing. Once I kept losing and losing and losing, I'm like, bro, I'm taking good setups. Why the fuck do I keep losing? There's no volume behind the setup, sir. There's no volume that is keeping the momentum for the buy side. There's no volume that's keeping the momentum for the sell side, right? So those things were very important. And that is what a course didn't teach me. I had to learn that by trial and error. I had to learn that from being around people. I had to learn that from losing. I had to learn that from buying eval after eval after eval after eval after eval, 100 plus evals, blowing my own money, losing 60% of my account in one day, right? I was on the side of the volatility. I was in the volatility just on the wrong side. You know what I mean? So if I'm in buys, the volatility is really selling. If I'm in sales, the volatility is really buying. So I had to take some time and actually understand the volatility and why it is important. And it's not important to everybody. If you're a swing trader, you don't really care about volume. You don't care about the day value. If you're a long-term trader and you're taking trades for years at a time, you don't really care about the volume. Eventually, it'll get to that price point. Now, me, I'm a day trader. I want the volume when I want the volume. It's my volume, and I need the shit now. That's how I look about it, and that's how I look at it, right? And I try to trade high volume stocks: Tesla, Nvidia, ES, NQ, AMD. Um, I don't trade Netflix. I don't really trade the AVGOs, the Broadcoms, the CMGs. I don't really trade those. I'm not buying option contracts dated 2025 for $4,000 a piece. That's not my forte. That's not my game. I like to take a little bit of money, turn it to a big amount, and then take the big amount and then make a big money moves with it. That's just the space that I am in my life. When I get to the point where I'm taking $1 million trades, absolutely I will have, bigger plays set out long-term investments. Absolutely. My goal is to not have to trade 5 days a week. I want to trade maybe at most 3 days a week. I want to trade to at least Thursday. I always love to take a Friday off, right? We call Friday "fuck your money" Friday in the group because the market don't give a fuck about your money, especially not on a Friday. And they'll send your ass home on the weekend crying. Your ass will be sick until Monday. You cannot do nothing until Monday. And then if you blew that account, you gotta sit all the way through the weekend. So yeah, it's your boy Cage, man. I appreciate you guys tapping in. I don't really know who watches the videos, being that I don't check. And you want to know why I don't check? It's because I don't do this for views. I don't do this for acceptance. I don't do this for people to be like, oh shit, you do know your stuff. You do this. I don't care. That I really do not care about. I do it for myself. I have to show myself that I can do it. I have to show myself I can be consistent. In these videos, I go back and watch them myself. I go back and watch myself. I guess it can sound conceited or whatever you want to call it. I go back and watch myself. I learn more from myself, but just as much from myself as I learn from someone else. Think about that, right? You can teach yourself more than someone can teach you sometimes because you know more about yourself than the next person. The person you're buying a course from, they only know that you want the course from them and you're in desperate or dire need from them. They don't know that you just got an inheritance. They don't know that you have them. They don't know that your job sucks the life out of you. You don't even have the energy to trade. They don't understand your financial and your actual life aspects. So don't expect them to. The only person that's going to understand that is you, right? So help yourself as much as you can. Your boy Cage, Mr. Cage Trades, Think Unlimited Trading. I'll always be here to help. Reach out, ask questions. I'll answer them to the best of my ability. No, I am not the most profitable trader. Have I made money in the market? Absolutely. Have I made significant enough money in the market to get me out of certain positions, get me in new positions? Absolutely. I was damn near homeless. I traded my options account up to about $3,000 and got myself out of my hole, right? I was damn near homeless, using my neighbor's Wi-Fi to trade, showering at their house, and using their bathroom, right? You gotta do what you gotta do to make it here. I'm telling you. So just like for people to understand that I'm on the same journey as you are. I got some, oh man, I got some good shit planned for 2025, man. We taking this shit to another level, 2025. And I don't have a team, just me, myself, and I, man, because I feel like if I can't do it myself, then why would I include somebody else into a undoable task? So I want to make sure that it's something that I can do myself and succeed myself. I want to succeed at trading myself before I intermingle myself with another successful trading group or another successful trader. You know what I mean? Because sometimes it does put me in a position where I feel like I deserve more, being that I'm seeing someone make money I significantly think I deserve every day. If I'm seeing someone make 500 plus $1,000 a day, it's gonna throw me off my game when I go trade on my own. It just is. There's no shade on them. There's no shade on the people that make a shit ton of money. I just kind of try to stay a little distant because I know the type of mentality it puts me in. I start rushing. I start thinking that stuff on a day-to-day basis when trading is a year-to-year basis. I don't care fuck what nobody said. Trading is a year-to-year basis. Okay, you traded in 2023. How did you trade better in 2024? Okay, how are you going to trade better in 2025? Trust me, trading gives you so many rewards. A few months into that new year, you're gonna be like, "What the fuck? This is amazing!" And you're not gonna be worried about, "Oh my God, I need money. I need this. I need that." You're gonna be totally okay with taking that year-long process and just building that account up. And before you know it, I sincerely think once I touch 100,000, a million, it's gonna be so easily obtainable. That's just my mindset on it, and I solely believe that. So that's how I solely trade. That I just have to get myself to a point where I'm building consistent capital to be able to take these plays like Tesla, Nvidia's, the NQ swings, the ES swings, these AVGOs, these big companies that are having these runs. You got to be able to get in when you get in. If you don't got $1,000 saved in your account, you may not be able to just get in these plays. You may not be willing to use your last, but guess what? If you would have got in Broadcom AVGO, you probably made about 5, 10,000 the next day. So it's all about being able to take that risk. But trust me, if nobody understand, I understand. It's hard to take that risk when you don't have anything to risk. So just know I understand that. It's your boy, Mr. K Trader, man. Think Limit Trading. Tapping in, checking out. I appreciate y'all tapping in, man. If y'all enjoy the content, let me know. Do a thumbs up, like, subscribe, whatever they tell you to do. It's cool. I'm not in it for the followers. I'm not in it for the subscribers. I'm not in it for the likes. I'm in it to just show people that I do this shit every day. If you don't see me post, I'm still actively doing something in the market. Your boy K Trades. We out.